Join me as I dive into Warren Buffett's most genius moments and see if I can learn his best investment strategies to apply to my own life. Warren Buffett is undoubtedly one of the most successful investors of all time, and for good reason. With a net worth of over $90 billion, he's built a reputation for his shrewd business acumen, value investing philosophy, and uncanny ability to spot opportunities where others see only risk. Today, we're going to explore some of his most genius moments, the decisions that set him apart from the rest, and what we can learn from his investment strategies. Warren Buffett's early career was not without its challenges. He faced skepticism from the investment community, who saw him as an upstart trying to take on the big boys. The market was unpredictable, and he struggled to gain traction in the early days of his partnership. To make matters worse, he was often at odds with his own partners, who questioned his unorthodox approach to investing. Despite these setbacks, Buffett persevered, convinced that his strategy would ultimately pay off. And pay off it did, big time. Buffett's early struggles were compounded by the volatility of the market. The 1960s and 70s were marked by turbulence, with stocks experiencing wild swings in value. Many investors lost their shirts during this period, but not Buffett. He saw the chaos as an opportunity to buy quality stocks at bargain prices, and his patience was rewarded when the market eventually turned. It was during this time that he developed his philosophy of value investing, which would go on to shape his investment approach for decades to come. One of the most significant challenges Buffett faced was the criticism he received from the financial press. They saw him as a rustic, unsophisticated investor from Nebraska, and predicted his downfall at every turn. But Buffett ignored the naysayers, focused on his investment strategy, and continued to deliver impressive returns to his partners. As the years went by, his reputation grew, and the same financial press that had once doubted him was singing his praises. As Buffett's reputation grew, so did his wealth and influence. He began to attract attention from the business community, and his name became synonymous with value investing. Despite his success, he remained humble and continued to focus on his core principles of business. It was this commitment to his craft that earned him the respect and admiration of his peers. One of Buffett's most brilliant investment strategies is his concept of a moat. He believed that a company with a strong competitive advantage, a moat, was more likely to withstand the test of time and deliver consistent returns to shareholders. He looked for companies with high barriers to entry, strong brand recognition, and a proven track record of profitability. Using this strategy, he was able to spot opportunities that others had missed, and his investments consistently outperformed the market. Another key insight from Buffett's investment approach is the importance of patience. He's famous for saying price is what you pay, but value is what you get. He's willing to wait years for the right opportunity to come along, and then pounce when the price is right. This approach has served him well over the years, and has allowed him to build a portfolio of high-quality stocks that consistently deliver strong returns. Buffett's ability to think outside the box is another key factor in his success. He's not afraid to go against the herd, and has often made contrarian bets that have paid off handsomely. He's also willing to take calculated risks, and has never been afraid to make big bets when he sees an opportunity. This contrarian approach has allowed him to spot opportunities that others have missed, and has contributed to his impressive track record of returns. One of the most memorable moments in Buffett's career was his investment in Coca-Cola in the late 1980s. At the time, the stock was trading at a low point, and many investors had written off the company as a has-been. But Buffett saw something that others didn't: a strong brand, a stable business model, and a proven track record of profitability. He invested heavily in the company, and his bet paid off in a big way. Today, Coca-Cola is one of the largest holdings in his portfolio, and has delivered impressive returns over the years. Buffett's investment in American Express in the 1960s was another masterstroke. The company was facing financial crisis, and its stock had plummeted in value. But Buffett saw an opportunity, and invested heavily in the company. He was rewarded when the company recovered, and its stock price soared. This investment is a testament to Buffett's ability to spot value where others see only risk. Buffett's willingness to admit when he's wrong is another key takeaway from his investment approach. He's not afraid to sell a stock if it's not performing as expected, and has never been afraid to change his mind when the facts change. This willingness to adapt has served him well over the years, and has allowed him to avoid costly mistakes. In conclusion, Warren Buffett's genius moments offer us a wealth of insights into the world of investing. By studying his approach, we can learn the importance of patience, the value of thinking outside the box, and the need to stay focused on our core principles of business. Whether you're a seasoned investor or just starting out, there's much to be learned from the Oracle of Omaha. Thanks for joining me on this journey into Warren Buffett's most genius moments. If you've got a favorite Warren Buffett quote or moment, please share it with me in the comments below. And if you're looking for more videos on investment strategies, be sure to check out our channel for more content.